Preview.
So Ryan, some of the things that companies help with during transaction is accounting cleanup. That's kind of a term that's in the accounting world. What is accounting cleanup? I mean, if companies are entering transactions on a monthly basis and producing financials, what is there to clean up?
Well, inevitably, there will be, some cleanup or some changes or errors in the accounting that happen, right? And I think you want either management or some advisors, as an extension of management to really help identify and clean those up ahead of turning a trial balance over to the external auditors to move through your formal audit process, right? So accounting cleanup is really exactly that, where you have a team of advisors who have a background in Big Four audit, who've been in the controller seat, that really understand what the auditors are going to need to really do that legwork up front. And what that's going to do is you're really pulling a lot of work forward and really off of your team that they would experience in a time crunch through a normal, year-end or quarterly audit process. So you really get things ready to, spoon feed the auditors. You've got things packaged up in a way to hand over. And now when the auditors have questions about what they see in the review, you have some folks outside of your organization who are now experts in what your business is and how it's been done that can answer those questions. Again, taking constraints off of the team through a tough process. So usually that's a process that pays for itself. You got to get efficiencies through the audit. It's going to go quickly. You're not going to have to deal with the overruns you might normally deal with in the audit process. And you can keep the pressure on the auditors to get them in and get them out.
Yeah. So along those lines and dealing with the auditors, one of the things that people need to do is write technical accounting memos. So Rhonda, what is that like, and why do you need them, and who they go to, and who cares? Like, what's happening there? Why we have technical accounting memos?
Right. The reason we have technical accounting memos is because, again, if they are going through changing from private to public, for example, getting ready to go public, they have new SEC and requirements and GAAP requirements that they probably, as a private company, they weren't really thinking about. And so there's, your revenue rec, and your leases, lease accounting. And then if you could have any debt, issues like that, where the auditor that's coming in wants an analysis of all that, wants to make sure that it's in accordance with GAAP and that you're recording everything properly. So, we come in and we help write those technical memos because we have just such a depth of knowledge in those areas. So again, we take the burden off of the accounting department, and we can get a robust memo put together, and we know what the auditors need. And so again, we can transition that right over to the auditors and help to get through what the auditors are going to have to get through in a more expeditious way.
Yeah. So to follow up on that, if you're following GAAP, they give you guidelines about how you should recognize revenue and how you should treat leases as an operating lease or as a capital lease. And so there's some guidelines there, but companies and accountants apply discretion, right? And so talk to me, Ryan, about how companies need help deciding how to apply that discretion and how to apply these guidelines in GAAP.
Yeah, there's certainly a lot of gray areas in accounting, and it is subjective on the company, the industry, and maybe the audit firm, maybe the audit partner, maybe the audit team. And they're all things you have to consider on, what's the best possible reporting outcome for your organization? How does that stay within the lanes of the accounting guidance? And how do you get the auditors comfortable with that? So we obviously bring a lot of expertise as prior auditors to be able to navigate those, have a lot of experience and background with the particular audit firms into how they see things. And we can either argue for or against in the right manner to really land on what we believe the right answer is for the company.
Yeah, so you bring in these consultants who are basically intermediaries between the company and the audit firm and saying, hey, this company's in this industry, here's how they should be recognizing revenue. And then it creates a conversation between the auditors so that eventually they sign off on that and say, yeah, this is in compliance with GAAP. Is that about right, Rhonda, or would you explain it differently?
Yeah, no, I think you're right on there, because really that's what we're doing. We bring the expertise, and, as Ryan said, a lot of us, depending on what the auditors that you have experience with, that you've worked with in the past, you know what they need, you know what they expect. And it really makes that transition and that handoff a little smoother, and really can help the company to, hold their position if they have a certain, one that they want to hold on to.